While market risk aversion has kept the S&P 500 and Nasdaq near and below their 2025 highs, Dow Jones is recording fresh 26 highs, trading near the 49,500 mark with persistent caution ahead. Hello everyone, this is Razan Hilal, market analyst with Forex.com. Today is January 7th, 2026. Now, looking at the US indices from a monthly time frame perspective, we can see that the Dow Jones is in the lead with respect to all time highs and 2026 gains, trading fairly above its 2025 high near 48,800 at 49,500. And with respect to the S&P 500, it's still trading near its 2025 highs, near the 6,940 mark. And with respect to Nasdaq, it is trading fairly below its 2025 high of 26,300 near 25,600, creating an overall notable divergence from the S&P 500 and especially from the Dow Jones, which is creating an overall sense of caution and risk aversion across the markets. Now, zooming into the Dow Jones chart from a monthly time frame perspective, we can see that since the bullish rebound from 2020 lows, the Dow Jones has traced a contracting formation all the way to the highs, and now near the 50,000 checkpoint. And those current highs are aligned with a possible diagonal formation connecting the consecutive higher highs between January 2022 and December 2024 near that 50,000 checkpoint. And if you do manage to clear that critical level, then we might have extended bullish forecasts towards the 51,100 mark all the way towards the 52,700 to the 53,000 mark. And these levels are derived using the Fibonacci extension tool between the lows of September 2022, the highs of December 2024, all the way down to the lows of April 2025, which marks the 100% correction of that, or the Fibonacci extension of those mentioned waves. Now, with respect to the downside, should that overall formation be confirmed to be diagonal, then we might have potential notable correction on the way across the markets, and especially on the Dow Jones chart, with key levels in sight being the lower boundary of that contracting formation connecting consecutive higher lows between October 2022 and the closes of April 2025, which also aligns with the previous highs of December 2024 being the 45,500 zone. And the clean hold below that level is expected to extend bearish forecasts all the way down towards the 41,700 to the 40,500 mark, which is the previously mentioned open and close levels between April and May 2025. Now, the deeper or extreme case scenarios may extend the lows all the way down towards our previous resistance and support zone, connecting the high of January 2022 and the low of April 2025 near the 37,000 zone. Now, the overall cautious outlook and potential diagonal formation can also be supported by the overbought monthly RSI conditions on the Dow Jones, which currently align with previous highs last seen in November 2024, preceding the overall drop of 2025 all the way down to the 37,000 zone, and also aligning with highs last seen in August 2021, which also preceded an overall drop between January 2022 all the way down towards October 2022. With an uncertain Fed rate policy, elections, and geopolitical outlook, key levels remain in focus to confirm key trends and headlines across 2026.